Joining me now at Post 9 is venture capitalist Rashaun Williams. He's an early investor in both Robinhood and Coinbase, among several other things. Rashaun, good to see you.
Thank you for having me.
Thanks for coming by. I mean, just when it comes to the crypto piece of this, obviously burst of excitement. Most of the storyline is, well, or promote broader adoption, and maybe there'll be a little bit, less kind of chasing after some of these businesses based on allegations of fraud. But how does it look to you in terms of whether there's an industry behind it and whether it's still a ripe investment opportunity?
Well, first of all, it feels really surreal to see the founders as publicly traded CEOs now when I met them almost a decade ago, right. And we were a completely different environment. I think with crypto and the digital currencies, unlike the public equity markets, you have the technicals and the fundamentals in public equities, right? You have the technicals in crypto, buy-sell dynamics,
sure.
But the fundamentals are largely dependent on regulatory and kind of public sentiment. We're in the environment now where I actually think the fundamentals will outstripe the technicals for the first time in a very long time. So I think you'll see a lot of explosion, you'll see that growth, and you'll continue to see the adoption kind of take place Main Street.
What are the components of the fundamentals? It's tough to chase this down, like when you really want to get down to it, because a few years ago it was supposed to be like new ways of lending and all the rest of it. And it seems like that's calmed down.
Yeah, I really think it's about the regulatory and the public sentiment. It's a speculative asset class,
sure.
Right? So what are the components of artwork fundamentals, right? It's how much people are excited about it, how well the adoption is, how sexy the asset class is. So up until this point, it's been all about technicals, but now the fundamentals are largely being skewed by the regulatory and by the public sentiment environment.
And when it comes to technology, as let's say the publicly traded stock, I mean, there's a lot of divergence, even within like semiconductors and software. It feels like the market's really aggressive in trying to separate winners from losers. How do things look to you, just in terms of a lot of the major sources of new companies, new growth themes?
Yeah, well, my job is to pick winners around the curve. So we're looking 5 and 10 years out. What's happening now is this huge tectonic plate shift that's happening with AI. I've only seen it happen 2 other times in the last 25 years, right? We have the internet, and then we have software taking over the world, right? So now with AI, everything that's related to it is rising. The entire ocean is shifting, and all of the companies are benefiting from it. So in our world, it's our job to look around the corner, what's going to be next. Of course, we're making money and investments now in this AI space, but the things that are coming around the corner, quantum computing, and then quantum protection, protecting security and infrastructure from all of the power that the quantum computers have. So think of cybersecurity for quantum computing. That's quantum protection. So those are the things that we're thinking about. But in this environment, we're super excited about everything that we're seeing.
That seems like it's a few steps down the line, it would seem to me. I mean, because part of the storyline when it comes to the AI build out is this is one of those big shifts where scale matters so much. You have to have the data. You have to be able to invest very heavily. So it almost more skews the advantage toward the established massive companies.
100%. When we were investing in Coinbase and Robinhood and Instacart 12 years ago, they would raise a $5 or $10 million Series A. These AI companies are raising a $250 million Series A, and they're valued at $1 billion or $2 billion because they're raising $500 million in their first year, valuation doubling, every 6 months. So that's a tectonic plate shifting thing, where Instacart is kind of an IoT, Internet of Thing, a marketplace type thing. It's a much bigger scale, much bigger theme, requires much bigger assets.
So it would seem to me then, if you're looking for founders who have an idea and maybe they can kind of work their way into some corner of an industry, it's probably harder to find that many of them, who can get to that scale quickly?
Well, you're not only looking for those whales and those big AI companies. I'm a guest shark on Shark Tank this season. And we look at tons of consumer products, and we know that entrepreneurship democratizes wealth creation and it drives growth in this economy. But there are plenty of areas outside of AI that people are still investing in. Even non-technology businesses are even booming and thriving right now.
And if you're looking just across the landscape, things like the possibility of tariffs, or what are the tax rates going to be in a year and a half? How much of that has to enter into your process?
Again, we're long-term investors. I know in the public equity markets, people are quarter to quarter, but for us, we're 5 and 10 years out. So we don't really get too caught up in short-term political, socioeconomic situations that are happening now. Of course, it affects funding, it affects economy, and it affects public sentiment and consumer confidence. But for us, our companies aren't even profitable until well into them being public. 5 years after the IPO is when they really open the spigot to profitability.
Sure. I know you're also involved in the NFL, part owner of the Atlanta Falcons. Sports is now just it seems like this feeding frenzy, people saying it's now an alternative asset class. It's not just, this almost trophy piece type of an asset. Does that change the attractiveness of it? Does it change anything about, what these businesses might be worth?
Yeah, it's always been an asset class. It just hasn't been open to private equity and to people other than billionaires mostly.
Yeah.
What's attractive about sports outside of the NFL and the Falcons, which obviously I'm not able to speak about, but it's the reoccurring revenue stream that sports teams get from media rights.
Sure.
And that's very similar to software companies. So a lot of VCs and private equity guys love the profile because their revenue is baked in for 10 years from tier one creditors, and they know that the top shows are all sports programming, right? Mm-hmm. So this asset class is going to grow. It's non-correlated to the stock market, very low risk profiles. And of course you have emerging sports industries as well, the pickleballs and unprofitable leagues. But those are more like early stage leagues versus the later stage leagues that are all profitable. Completely different risk and return profiles.
Sure. I see the kind of startup leagues. They want to get a little bit of the media rights and have it work for them.
I would
way,
too. I would want some too.
Yeah.